Volume 2 of the Precision Concepts series. And the initial video 1 on this three-part series, we discussed weekly order flow and the inherent advantages of understanding what the long-term order flow is on a weekly chart. Now we're going to be focusing on really specific order blocks on a weekly basis. And I've received a tremendous response in terms of appreciation and astonishment with the precision that's available with utilizing the ICT order blocks on a daily 4-hour and 1-hour basis. Um, I'm sure a number of you probably didn't consider the fact that you could utilize the same premise on a weekly and or monthly chart. And I'm going to counsel you to study the markets of your choice on a monthly basis and on your own leisure. Okay, but we're going to be utilizing really just a weekly basis or weekly chart as our premise for this teaching module. Um, the previous video, volume 1, we discussed weekly order flow. And I'm quite certain that I'm going to be catching a lot of feedback about those that want to have the actual direction right 100% of the time. And I cannot give you a tool or concept that gives you the direction 100% of the time accurately. Okay. If you find someone that can do that, I would absolutely love to know who they are, and if they have a service, I would be willing to subscribe to it. But as it is now, my faith in that is very, very low, and expectancy is even lower. So you don't need that, okay? But volume 3, we're going to be discussing a concept that will help you in that area if that's something that you're going to be struggling with or already adopted a hurdle with it. Okay, so if it's already being a bothersome thought for you right now, I'm going to put it aside and remove it for you in volume 3. But for now, let's just focus on the weekly order blocks. Okay, now a weekly order block is the same thing we've been doing with the daily chart, 4-hour and 1-hour chart. Okay, we want to look for areas. Okay, and I'm going to be not trading, but I'm going to be teaching rather with a clean chart. I'm not going to be putting any support and resistance on it because frankly, you understand what it is that I look for in terms of support and resistance. What we're going to be looking for are specific reaction levels. That's it. Okay, we're going to be looking for where price moved away from aggressively, spent very little time there, okay, and then returned back to it in the form of an order block. Okay, so now we could go through all this back here, but I'm going to be saving all this because I want to be utilizing it for volume 3. And trust me, it'll make a whole lot more sense when we get to volume 3. But in here, we're going to be talking about this area here because I think at real quick glance, okay, market structure alone should be you know, flashing neon sign hello. This is a long-term or intermediate term low in place because we have higher short-term lows on either side of it with higher swing lows on the other side of it as well. Okay, so we have layered swing highs and swing lows. So we have basically a fractal form. We have a low, a lower low, a higher low. Okay, and we saw price aggressively move higher off the low. Okay, and we have a very clear order block right here. Okay, and price comes down into it rather handsomely, and then once we form a solid swing low in here with a confirming candlestick, not that I have a whole lot of faith in candlestick patterns themselves, but we have a nice hammer in here, and you see price has a really respectable rally. Now we're going to assume that any long taken right at the order block, we're going to assume that 85.42 on the weekly chart. Again, this is the Euro USD fiber. Okay, buying there, the potential in terms of range was 797, so approximately 800 pips. So that's certainly respectable, and by any standard. I mean, if you're not impressed with 800 pips, I got nothing for you. So we have obviously we see the advantages of seeing weekly order block illustrated here. Price when it rallied out of here, it created another order block. Okay, and again, I do not like the long wicked candles here. Okay, even though this is a hammer, I would much rather have my order block associated with this. Okay, because this candle has more body, even though it does has wicks on it. Okay, it has more body to delineate it from this type of event here, where we have a very clear wick or hammer or a doji, if you will. Price comes down, trades right into that order block, and rallies off rather handsomely again. Now, again, we utilize the market structure back here to frame this setup. Okay, so it's right out of the Sniper series. So it shouldn't be nothing new to you there. As price begins to trade higher, obviously, we have new order blocks forming where price came down, spend very little time here, rallies off aggressively, and then drops back down into the order block right here. Okay, and again, we're just going to use the old high. Okay, I really want to be conservative in terms of showing you what to anticipate or expect. But certainly, it's not limited to this. Okay, so again, if we were buying down here inside this order block, just getting back to the old highs back here, that's 1,000, almost 1,100 pips. You heard me right, almost 1,100 pips. Okay, some of the biggest moves that you see in my older videos where I was calling summer lows and spring highs and such. Uh, this is exactly what I was doing to frame all that. Okay, but you all saw simply me taking a Fibonacci tool and saying, okay, here we're going to take this low here and we're going to put it on this high. And you see when it comes down to the 79% retracement level, I have an ICT optimal trade entry, and that's what I was buying. The part that I was leaving out was it was framed upon an order block. Okay, I didn't want to share that with you because I wasn't able to keep up with the questions I was already being confronted with the information I was presenting at that time. So to institute one more facet to the concepts that I use, it just would have been I wouldn't have been able to keep up with that. I probably would have quit altogether because I had tons and tons of feedback that I simply could not keep up with. But you can see the nice move back down into this area here. Now, before we go any farther, it's important to note that when we're utilizing this weekly time frame, it's not simply that we got back down to a previous order block level. Okay, as soon as it gets down there, we buy. That's not what we're doing here. Okay, what we're looking for is a confluence of supporting factors on the lower time frames as well. It means on a daily chart, 4-hour chart, 1-hour chart, 15-minute chart, and as far as execution, we could get down to the nitty-gritty with it on a 5-minute time frame. But it's got to happen around a time window. Okay, so time has to meet price. Price comes down to the area where we anticipate the order block to unfold, but then we have to wait for the price and time to meet. That means the opens and closes. That means London open, New York open, London close. Those time windows, there's specific swing points that occur. We do our trading and execution where we engage the market in those three predominant time frames. Okay. Yes, you can trade during Asia. I just simply avoid it because to me, it's the accumulation phase of the day. Okay. But with that assumption in mind, if you're a pattern trader, you could be trading optimal trade entry longs in here. You could be trading, any harmonic pattern that's bullish in here. Okay, you can trade, good grief, you could trade bullish stochastics or bullish MACD. All those things that we see in textbooks will suddenly now be profitable in this environment. Why? Because we have the market trending higher. Open, order flow on a weekly basis is higher here. We see a retracement going down into a weekly order block. All of a sudden, it's like a bat out of hell. It takes off and starts running. It didn't even stop at almost 1,100 pips. Did it slow down here at all? Absolutely not. Just roared real and continuing higher. Okay, so we also have this order back here. This order block rather small, but I'm going to show you having this mindset, if you have the patience really, and what I'm doing is I'm putting the horizontal portion of this crosshair right on the top of this candle here, and I'm going to show you just by going back to the old high just here. That's 260 plus pips. Just that little move right there. And that's in 1 week. 1 week, and it didn't stop. Didn't even stop. Just kept on going, rolling up. Okay. So again, when you're looking for these types of setups, it is absolutely paramount that you understand we're not increasing our risk or leverage on these trades. What we're doing is we're keeping our risk very, very low. We're keeping our leverage low, but we're opening our mind and eyes to the likelihood of rather extremely large profit potential. Okay, so yes, we can take a small portion of the trade off, fund our position, get all the risk out of the trade, take a small portion. That way, if even if it does come back down again and stop us out and possibly create another new opportunity to get long, but not necessarily true. It could be, we could be wrong on the trade as well and just continue to go lower. At least we paid for our position to at least take a look at whether or not it's going to potentially pay out, for a rather large trading opportunity. Now let's assume, okay, I'm not going to break down the chart here, but let's assume for a moment that we were able to find a trade setup in here inside this weekly order block, risking our average universal 30 pip position. Okay, in other words, we took a long position in here and we're risking 30 pips. Okay, now obviously I'm speaking hypothetically because I don't have any charts opening up in here to show you what this is, but we're just going to play devil's advocate for a moment and assume for a moment they had a trade with 30 pips on. Once the trade moved 30 pips, okay, we could go to break even, remove all the risk, and let it go. Okay, now let's assume for a moment that we were trading with the form of one standard lot, and we took five micro lots, sorry, five minis off. Okay, so we'd have five mini lots left on, so you're making $5 per pip. Watch, I want you to pay attention to this because this is nuts. Okay, you're risking $300. Okay, this is the mindset you should be coming to. You're risking 30 pips at $10 per pip on a standard lot in here. Now assume, and again, this is all assumption, this is all hypothetical speaking now. Assume you bought it, you took off half the position, now you got five minis on. So now you're making $5 per point. If you get in and you ride this thing up here, okay, that's over 5 grand. $5,000 on a trade that you risked $300 on. I don't know where you're from, but that to me is outstanding. It's ridiculous, okay? And you only need a few of those a year over a collection of the majors. That means the Swissy, the Japanese yen. I don't like it so much, but you can trade it. The euro, the British pound, Australian dollar, the Kiwi, and the Canadian dollar. You could have just those pairs as a basket of what you trade as your portfolio in FX. And if you look for these types of setups in this market, I'm telling you, this is where you clean up and you clear out all of the drawdown periods. You take out all of the big losses or strings of losses, okay? When you have a small section of your account allocated to trading like this, and still you could do day trading, you can still scalp, you can still do short-term trading, okay? But you need these types of things to act as a Mr. Clean magic eraser, if you will, if you ever use one of those things. They're amazing. My wife brought this thing home one day, and we had something all over our account. I could not get it off. So she brings this little thing home, and I'm like, "What is this?" She goes, "It's a magic eraser." So of course, naturally, I'm thinking she's full of crap, and I'm like, What are you talking about?" You wet it, you rub it on there, and it takes the thing right off. Well, this type of trading is like a magic eraser, okay? It completely takes away all of the stains of poor execution, poor trade selection, or Russian, okay? And you don't even trade a whole lot, and you don't risk a whole lot. It's the same amount of leverage, the same amount of setup getting in. But look what you're doing. You're framing it on the mindset of a huge, absolutely monster of a trading opportunity, okay, in the form of a weekly order block with a order flow, moving in one direction. You got everything lined up for you. Okay. Also, if you know anything about seasonal tendencies in my earlier work, you know that around September we like to see a rally come into the foreign exchange market, and you see that happening right here, lock, stock, and barrel. Boom! It takes off and rolls. Okay. Now again, much like we talked about earlier with the the weekly order flow and how we allow the market to do its retracements, there's nothing to fear in regards to sitting on your hands, because think about what we're doing. If we're waiting on these long-term weekly positions to set up, okay, we can establish long-term positions. We can still trade our larger risk. In other words, our maximum, say, assume for a moment that we trade with a 2% maximum, which is something I advise, nothing more than 2%. Even though you hear me talk about 3.5% as a maximum, that's my account where I'm trading for $1 million. That to me, I need that type of gearing to get what I need done in the 36 months that I'm pushing it. Well, in your trading, if you're risking 2%, your maximum, those conditions are authorized, okay, when you're trading in line with the higher time frame premise. If you're trading against the higher time frame premise, like during something like this, first of all, I would advise not to do that. But if you're a hardcore, can't have it any other way, but you got to be, taking a trade because it's there and you're sitting in front of your chart, that's when you want to be risking a half of 1% or a maximum of 1%. Okay, because you're swimming, upstream. You're trying to fight the tide, and that analogy kind of goes against what I'm depicting here as an up move. But what you're doing is you're trying to go against the grain. And I'm sorry, I don't want to arm wrestle the banks, because they're going to win every day. So what we do is we sit back on our hands and wait for these retracements to come back into known orders. I'm sorry, known order blocks and support and resistance. And this is one of those areas where even though you have a very nice block potentially down here, what did we talk about before? And you heard me talk about it in the sniper series as well. If we have like a hammer or a wick, I don't like that. Okay, I want to see more body in the candle. Now, I'll use the top of this candle as the beginning of my order block. And if you draw that straight out, okay, you can see we came right down to it. And I know some of you are probably saying, why don't you just draw the freaking line, Huddleston? And that's what I'm going to do now to keep the natives restless. Oh, not restless, but keep them happy, rather. So, again, here's the order block here. Price rallies up. In the past, you would see me in the old Pro Traders Club series. I would just simply reference this swing low and this swing high and place it on there and say, okay, here's the optimal trade entry where I was buying long. But really, again, the framework is always on the institutional order block over here. And on weekly charts, they're absolutely dynamite. They're just ridiculous in terms of how much is made available for pip expectancy, and you just simply can't come up. You can't beat this type of setup. The gearing for it is the same amount of leverage and entry that you would take on a normal short-term trade or intraday trade, but you're holding with the premise in mind that you're going to get back to an old high. Okay, and again, since this is the old order block here for a long, if we're buying anywhere in here to get back to this high back here, I mean, I want you to pay attention to this, guys. This is exactly how, if you want to get wealthy, this is how it's done. 1136 pips, okay? 1136 pips. That's a huge move. Absolutely huge, okay? We have smaller ranges in here that we're probably more accustomed to seeing now in most recent volatility. But the order block in here, come down, you buy it, rally up in here. Just that move, again, referencing this order block here, back to here, that's 392 pips. There's nothing wrong with that. There's nothing wrong. That's several hundred pips that if it goes in your bank, you're gonna be thankful for it. If it was going in mine, I know I would be. $120 per pip. You're damn right I'm gonna be happy about it. So looking at how we look at the marketplace on a weekly time frame, looking for where price rallies and pulls back into a known order block. We just referenced this one here. Okay, and let's call it again. Okay, we trade back down into it again. Okay, very nice price structure. Comes back down, dips into the order block. Notice it does not violate this low. Again, this goes on the same theme we talked about in the first volume, where how do I know a support resistance level is going to hold? I don't really know if it's going to hold, but if I see an order block in the framework of the price structure, I don't think that it's going to give up this level, because somebody with more money than me caused this market to rally up like this. If it comes back down to this level, if they're long here, do you think they have a vested interest in defending this area? Sure they do. And you see that happening here. Price comes down into it. So what are they going to do? They're going to buy more of it. Okay, and the price does what? Rallies off. Now, yes, eventually it comes back down, takes out that low. But before it does it, okay, just again, we're going to buy the right at the order block, not the lowest low here and making it look perfect. What's available? Over 500 pips. Now, I don't know about you, but 500 pips is, that's pretty good. We're going to talk about a concept in the third of this series, okay, where we can work both directions, okay, and I really want to almost started talking about it here, so I got to watch what I say. Not that I'm trying to keep anything from you, but you're learning it later on in the third video. We have another price structure here. Okay, we have this low up to this high. So let me go back a little bit because I want you to see it. Yes, we have this swing here, this low to high, but we also have this reference point as well. Okay, so this old order block, we're going to come back to that one again. Okay, notice how it's in support level, and we're going to continue it out. And look what it does. It comes right back down and creates another opportunity to buy inside that pre-existing order block. Okay, and what does it create again in here? A new order block right here. Okay, this is the last bearish candle prior to the lowest low before it starts moving higher. So this low forms inside this order block. Okay, you see that? Price comes back down, dips right into it, boom. Now you know what's going to happen when I pull a fib on it. The low to the high prior to its decline, right there on the sweet spot. Bang, there's your confluence. Okay, where's it trading at? 1830 round number, and the low, see if I can get it. The low comes in at 1824. Okay, so if you were trading right at the 1830 round number, your drawdown on that is 6 pips. So that's pretty respectable. Okay, again, we're trading off of a weekly chart, not 5-minute chart. Okay, and just to get back to the old high back here, buying at the order block, nothing spectacular, trying to reach for the lowest point or nothing like that. Okay, we're looking at 490 pips. We're almost 500 pips. Again, just getting back at the old high. Okay, if you were looking at market structure, we have a swing low here, we have a swing low here, higher swing low here. With higher short-term swing lows, we have a potential intermediate term to long-term swing low here. Okay, so that means if we take out this high here, leaving a small portion of our trade on, we could be looking to trade what? Back into this high. Now again, going back to this level here, now we're looking at 760 pips or so. Yeah, about 760 pips from an entry here, taking a small portion off here and leaving a small portion with the potential to look back at this high here. Why? Because we have the market structure to at least give the impression that we may try to get back up in that range. Okay, and then look at even blue beyond that, pull back again. We have a bullish move here. We have an order block right there. Trade down, blew through it. Now this order block was violated. Okay, when I see that, I get a little nervous because I don't like to see a bullish order block taken out. But reference it with this old high back here. One of the central tenets we have in understanding about support and resistance is we are in the gray when we're trading with it. We don't have a clear level where it's going to go. Whoop, Huddleston has his line on his MT4 or E-signal chart, and he's therefore we got to stop right there because he has his line there. They don't care about our lines. Okay, our lines are a reference point that we arrive at. The levels are traded based on the liquidity that's available around those levels on an institutional level, not a retail level. Okay, but simply because we all trade and learn from the same toxic textbooks and gurus that have no idea what they're doing. You end up in the same crowd of losers if you don't have the understanding of why the dealers take price to where they take them before the real moves take place. Now, moving forward, you can see by moving lower like this, we did trade back into these levels, but this order block being broken like this, I would have to wait for another opportunity to come back down into it, and that happened here. And right in here would be another opportunity to trade into this bullish order block, because we have this high as an old high or resistance. Now it becomes an inversion level because now it becomes support. This wick is an inherent price action. In other words, it blew out this level, taking out stops, which makes sense because as the price was rallying up, trailing stop losses would have been brought up to this level here, and they took them out and then rallied up, came back down one more time for good measure, and then that's when you see the real extrapolated move unfolding. Again, this doesn't fit my criteria, so I would not see this as an order block here, even though in this case, if it was used, it would be perfect. But in fairness, I want to admit that that one really wouldn't be something I would see. Now, maybe on a daily chart or 4-hour chart, there would have been something else there, which obviously, which is what we discussed earlier. That's what you're utilizing once you have this in mind. And again, as we find these weekly order blocks, okay, and this is one of the main reasons we're discussing it, is once you find one of these, well, not this one, we're going to classify this one back here. Once we trade back down into these order blocks, okay, when it starts to unfold and rally up, we're not looking at 5-minute charts or 15-minute charts. If we're long down here saying, okay, well, it's gone up enough pips for me, I'm just going to get out. If you are framing your trade on this weekly chart, what are you managing the trade on? A 15-minute chart? A 60-minute chart? 4-hour? How about a daily? No, you're managing it on a weekly basis. The framework of the trade was derived on the weekly chart. So if this is the old high back here, or this high here rather, I'm sorry, I'm getting ahead of myself. If you're buying down inside this pre-existing order block, okay, and again, we're going to say we got in here, okay, for whatever reason, we saw something was bullish here. Just getting back to that old high, that's 300 plus pips, okay? That's how you're managing it. But we also learned that when we have highs like this, they're too clean. So we would expect not only for it the price to rally up to there, okay, but try to reach through it. Do you think it reached through it here? Sure looks like it to me. And when it comes back, what does it do? It retests what? An area of old highs. Okay? Look at the bodies of the candles and the wicks. Take it right over here to that. So even though this is not an order block, by definition, with what I would classify as an order block, because it has too much of a wick, I would have rather seen more body in that. Something like this is more appropriate in my opinion. If you want to be aggressive, you can trade these types of candles. And once we have these big moves like this, I just seen a lot of these type order blocks, quote unquote, fail. And because I want to give you the highest in terms of consistent approach of utilization of these tools, you know, I want you to feel confident utilizing them. Otherwise, it's absolutely pointless and waste of your time and my time making these videos. But when price comes back down to an area of support and resistance, okay, we have market structure signifying that we do have a trading range that was violated, coming back down into very clear, discernible support and resistance, okay, and we saw a price rally from there. Again, we have a similar scenario here. You could potentially use this as an order block. Again, I wouldn't. I would reference it more so on a retest of this old high here. So we had the market run through it, trade back down into here. Okay, now once it starts to rally, I would view this candle, okay, because it has much more body and not the wick here, because it's, even though it has a little wick here, it's to me, it looks like it's being pushed down to accumulate more longs. And then we have this supporting candlestick. Not that it's all by itself, you know, deriving the trade idea of a hammer. I would rather see this as the bullish indication, not the long wicked candlestick or hammer. utilizing the previous order block. Price trades down into the order block. Right down into the 79% retracement level. Right in here, you would be hunting a daily 4 hour, 1 hour, 15 minute, or 5 minute at the time of a open or close on a session. That means London Open, New York Open, London Close. In those three, some sort of bullish price pattern in those time windows would be a catalyst to catch a long in there. Again, assuming that that's the case and you were able to get in, again, we're going to use the worst case scenario, the actual order block high. Back to the old high is over 300 pips again, leaving a small portion just in case it wants to run, and run it does. Continues on trading on higher. We see price move up in here. We have a large, rather large order block in here. We trade within. These are the ones you want to break down on the daily, 4 hour, 1 hour chart, but it's still beneficial to utilize the weekly time frame because it is, again, another reason to frame rather explosive trades and also very large profit objectives in terms of looking for where prices may reach. Again, I'm just sticking with the buys, and I'll leave it to you to go back to the first volume and applying the 918 to see where we are in terms of overlaying that, because really what you're also going to do is when you have a confluence of the order flow on a weekly basis going one direction and you're looking for order blocks inside that same premise, it's absolutely crazy on how much these moves move. They just explode, and where they go, it's well beyond where you think they're going to go, and they're just enormous in terms of how far and how vast the price surges go and declines too. Okay, we have again, this is it's really difficult for me to say, okay, well, this is going to be a great order block to show you, because it doesn't fit the definition. So I would have to go down into a daily time frame to illustrate here, but you can pretty much see rally comes back down into that same area and rallies off again. This is the order block that I would use, and missing the weekly opportunity back here, and that's fine. I don't care. I'm not pressed to catch every move. I want to have everything lined up based on my parameters. And here's the order block because it has a majority of body in that candle. That's what I want to see prior to the move up. So we dip back down into the order block here, and inside this order block we would be looking for daily 4 hour, 1 hour, 15 minute, and 5 minute basis on price patterns to entry to alongside around time and price windows of the London Open, New York Open, and London Close. Those three time windows are catalysts for time and price to meet, and then you can see price taking off here. Okay, again, focusing just again, I only want to focus on one side of the market, not because there isn't a reason to go long or short in here. I just want to give you one side because everything else is just reverse of it. Okay, we have a very explosive move higher, and notice I'm avoiding this candle here. Okay, and you're still inside that range anyway with this candle. Price rallies up, comes all the way back down into the order block. Okay, if you're looking for a long in here, taking any price pattern when time and price meets at a kill zone, ICT kill zone, there's 1,365 pips made available just by returning back to this old high. And it only takes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 3 months to get to 1,300 pips. And that's pretty, it's pretty crazy. But that's what's available to you when you start trading with this type of concept. Okay, we move back down inside this same order block. We'll extend it out in here. Okay, trades right down into it again, rallies off one more time. Okay, and there's a couple hundred pips available as well there. And I'll show you one here. Here's your order block. Big bearish candle prior to the move up. Okay, we entered the order block. I'll fix it when we get over here. Big order block. Okay, rallies on up, takes off, and again, just getting back to previous highs, which it did in every instance here. Huge profit potential, absolutely astronomical in terms of how much is available. We have one more here. Again, these are weekly order blocks, guys. You're focusing on the big moves away from a particular level. When it trades back down into it again, okay, pulling your fibs across that, looking for bullish patterns, okay, to frame your old highs and lows as targets. You see it handsomely tags it, okay. You can see clearly that there's a lot of opportunity made available to you trading with this premise in mind, because it gives you a very long-term perspective. And once these order blocks start to unfold, you can trade scalping, short-term intraday trading, day trading, or short-term trading with the weekly range premise that we teach in that directional premise. Okay, so that's how you get the direction right. Okay, that's how it assists me as a trader in keeping the direction, focused in mind. And you can see another order block retested here, rallies up, and this order block as well, right there, rallies off, and this one as well here, which we just saw last week. So hopefully this has been insightful to you guys, and I wish you good luck and good trading.